In this video, guys, I want to talk about why I'm a big fan of target-based trading. Stick around. Hey traders, warm welcome to you. All right, so I know a lot of traders don't agree with this approach. A lot of traders say, hey, I don't know where the trade is going to go, and so I'm just going to hold it until I see a reversal signal. And I think that's absolutely fine. You know, I'll never ever stand up here and say, hey, that person shouldn't trade like this. Every person trades as they want to trade. Everyone finds their own methodology that works for them. All I could do is stand here and say, hey, this is what works for me. And, you know, maybe you take some of it on board and maybe discard it. You know, that's the name of the game. I definitely don't pretend to know everything, guys. So, but this works for me, because the reason this works for me, let's kind of jump forward a bit, why not? It really helps psychologically, because if I've got a target, by the way, this target-based trading could be price target, could be also a time-based target, or it could be a duration target. So price target, pretty self-explanatory. I think the price is going to hit 100. That's my price target. Time-based target could be, hey, I'm going to hold this until the close, or I'm going to hold this until the European Open, or I'm going to hold this till noon, or I'm going to hold this to a specific time that I believe has an edge to hold it to. Close is a great example, right? If you think it's a trend day, then you think it's going to close on highs, and why would you close it until the end of the day? So that's an easy target. And then duration is, okay, I think we're going to get a bid for the next hour. Again, this is kind of operational stuff, but these are price-based targets, or not price-based, these are targets, and they're not just price-based targets. So that helps psychologically, helps you hold a trade, right? Because you think about this, if you are then constantly assessing the trade position based on the target, you're assessing things, it helps you stick with the trade. It helps you add to the trade too. Because if you are saying that's the end of the trade, if it hits that level, it hits that time, I'm done, it's far easier to stick with the deal. So when it's going your way and it's kind of, you don't go, oh yeah, but I'm going to come out. You could, no, that's good. That's the starting the ball rolling to the target. And it's really good psychologically to kind of have that, hey, I'm going to hold it to this target because that's the target I'm trying to do. And if it stops me out, then fine. You can then deal with the fact that maybe if your targets are out, you're not very good at picking targets, that can be something you work on after hours and kind of think about a bit more clearly. But it's such a good way, and again, personal preference, good way of doing it. So imagine you've got this scenario, right? Market's been trending up. Let's say it's been a downtrend on the daily. Let's make things easy for ourselves, right? It's been downtrending on the daily, so it's looking pretty bad. High time frame trends to the downside. You see this scenario, like, yeah, this is the short opportunity. We've had a blow off top here. We've trapped in a load of longs, and we are now blasting towards the downside. So I'm going to target those daily lows. Good and obvious target. Many traders, you guys use as well. The intraday traders, you're targeting daily lows, daily highs, looking for those stops to be triggered. Going to buy into those sell stops that come in and want to get short early. It's a classic trade, right, for a professional trader. So imagine you have this scenario here. You see a little bear flag, and let's make it easy for ourselves again. We kind of get short on this bear flag on a break of the bear flag. Great. So if you didn't have the target, but you saw this, still valid, right? Still valid. But imagine this now. Imagine now we come up to, let's say, a VWAP. I'm going to mark no one here VWAP so that we remember what it is. And you know, most of the time we're going to be thinking, ooh, price could easily stall at a VWAP. It could also stall at a key level. It could be any level of support that's sitting there, right? So price comes down and it starts to stop at the VWAP. Now, if you don't have a target in, forget about your target now, you just look at that. You would probably say, price is stalling at support, I'm done. And you take your profit and you move on. And that's okay, but you're leaving potentially a lot on the table, because if price is going to move, it's not going to stop and hold at every support level. Support levels don't always hold. Sometimes they do. It's a level that you look at, but often they fail, right? So a breakout trade is. So if you've got this target and you're a little bit, let's say convinced, but you are, you know, you've got you put a high weighting on it, let's say. So you think it's got a good chance of being tagged, then you're not going to come out of VWAP. You're going to say, okay, this is good. VWAP's there. I've got a cushion, right? If this thing pops back up, takes me out, then fine. But look at the reward I've got. If this thing keeps moving lower and I'm right with my target, you know, I can make a hell of a lot more. That's an extra maybe 3 or 4 R on the trade. Whereas there, maybe you've got 1 R or 2 R, whatever it is. That's a massive amount extra. And so when you have the target, you have the confidence to hold when price is at support, in the example of a short trade, and say, hey, yes, It may bounce off here, but I'm good because I have a cushion. I have an unrealized P&L cushion because I got in early, and now I'm in the most powerful position possible in that I'm able to enjoy the fruits of the breakout if it occurs, but if it doesn't occur, it's not going to cost me much money. Yes, there's some unrealized P&L lost, but I've already got that cushion. I've already decided to use that unrealized P&L as a cushion to give me the kind of relax and comfort and feel more relaxed, let's say, and more comfortable with the trade because I can move around a little bit. You're not so, is it going to be a loser? Is it going to be a loser? Not that we should be doing that anyway, but we're human beings, right? We're human beings. So having that target-based trading says, okay, it's hitting that support, but it doesn't matter because it could easily break the support. And then if you go more advanced on it, you start scaling in. You go, okay, the support was there, it's broken, I'm going to add a bit more. And you're using that cushion as a little bit more to make you feel more comfortable a little bit. Okay, you're never going to feel fully comfortable. It's quite uncomfortable to add to a position like that. But when you think about what you've done, you've really leveraged yourself into a position where you're in a size you want. You have unrealized P&L there. Worst case scenario, it comes back, stops you out of break even. Yes, there's a certain fallacy with that, but ending the day, not down is okay, and you feel better about that, generally speaking, than ending the day heavy red. Right, so you're in this position now. You're like, okay, I've leveraged myself. I've shorted early. I've been rewarded for shorting early. I've added a little bit more to this, and it helps you add, because if you didn't have this target, very few of us, if we didn't have an ultimate target, would short here and then short again here. Most traders, that's why unfortunately most traders aren't getting the results they want, start to peel off some of the position. They start to take some of the position off. And really, it's been taken off at the worst possible time because the thing's just getting going, and you're in the perfect scenario, and you've just thrown it away. You're like, man, I'm early into the move. The move just started going. I was shorted it ages ago. Everyone else is just realizing this thing's about to fall through the floor. I'm already in. I can join the first batch and still make money, and then come out when everyone else realizes they're wrong, or the longs realize they're wrong. You're in a powerful position, but most of us give it away and go, oh, I've just seen that profit. I'll grab it. I'll snatch it. And this is why we never get these kind of big runners, especially as an intraday trader. You kind of always locking in profits. And whilst it's good on the face of it, you never give yourself a chance to make those big trades. And okay, maybe the elephant in the room here is, well, how do you come up with key targets? That's a skill you develop over time. Now, prior lows, prior highs, VWAPs, 2-day high, the normal stuff. We don't have to overthink this, guys. It's a simple thing. Where could price go? It could feasibly go if the sentiment changed back to the current day low, right? Could go to tomorrow's low. These targets you just know from the market you're looking at are very feasible and very reasonable. And so coming up with the targets, yes, sometimes you're going to get it wrong. Sometimes the market's going to go all the way there, come all the way back and stop you out. But that's the price you pay. That's the price you pay. There's no free lunch in trading. You're giving up the chance of locking in the profit for the chance of making more. And I guess the subtlety and nuance comes in is how far you stretch the target. Do you go for a further target? Do you kind of keep it short? Because your target might be VWAP. It doesn't always have to be a massive target. Your target could still be VWAP, but you'd be trading it within that range there, and then you probably wouldn't be adding, right? Okay, VWAP, come, I'm out. So it doesn't matter what your target necessarily is, but I think it just helps you review and assess the situation far more clearly and kind of look at and help you hold the trade. You're like, okay, I'm holding this to target. I'm not going to be forced out of the trade. I'm not going to come out for just because it stops at some support on the way. It's going to do that. Anyway, guys, take care. Target-based trading. See you next one. Get your risk managed. Bye-bye.